see what we
awesome.
can do. Let's see what we can do. I have to agree to this.
Those pictures are fake.
Bill, I don't know. Maybe. Well, we'll get into that. So, all right. Good. We got everybody jumping in. Good. So as people are coming in, you guys will notice something that's a little bit more unique. And actually, one is we want a lot of interaction. So what you guys actually will be able to see your screens, and certainly you'll be able to interact and ask questions, but we'll actually be able to see your names and screens, and everybody's bashful. I don't have anybody's cameras on, so that's okay. But, oh, hello. I see Boney in there, so that's good. My screen just changed a ton. We will still be allowing you guys to interact via chat, but you could certainly speak, I believe. Tony, is that correct?
Yep, as long as they unmute themselves.
As long as they unmute themselves, otherwise you guys can hit the chat. So we're getting everybody into the room. I don't like the way this thing opened up on me. That's what I want. Exit full screen. Perfect, much better. Okay, good. Good. So we've got the doors open. It is 12 o'clock, so we are going to get started. We've got a big panel today, so welcome everybody to our one-time close presentation. I'm going to start introducing our panel of folks, and then we'll get on with the program. First of all, we want to thank very much Carolyn Kennedy. Carolyn Kennedy is with Old Republic Title, and she is the one that actually paid for anybody's sandwiches that they're eating out there from Jimmy John's. We do a virtual lunch and learn, so we have sent sandwiches to many. And Carolyn, being in Title for 15 years, if you don't know who Carolyn is, she's an unbelievable networker and also really good at golf, I hear. So that being said, Carolyn, I'm going to pass the screen over to you and let you just introduce yourself to the agents before we introduce the rest of the panelists.
Hello, everybody. Thanks, Rich. Don't know where you got that info from.
About the golfing.
Nice to meet you all. Carolyn Kennedy with Old Republic Title. Happy to host and glad to be here. Looking very forward to hearing some new ideas and opportunities in the builder space, which we definitely have a builder division, which we work very closely with our lenders on. So thank you very much for having me. Happy to be here.
Thank you very much, Carolyn. We'll get Carolyn's contact information. Tony will get it in the chat for us. Next, we have what I consider a good friend. He may not, but I consider him a good friend. Pat Kieran has been with West Point Builders. He's actually West Point Builders. He's been 25 years in the building business. We originally started working with him in a subdivision in Elgin, which was West Point Gardens. That subdivision was built and closed out a couple years back, and now we're still a partner with him in his Oswego project. He's got a townhomes, single families in Oswego, custom homes out in St. John's, also does some building in Northwest Indiana. And in the fall, they're going to be opening up a 55 and over community also in Oswego. So, and the one thing that the only thing I can drag out about Pat was that he was in waste management before he got into building. And somehow, I don't think he's connected. In Chicago, if you're in waste management, you're in the mob, but I don't think he's in the mob. So Pat, welcome very much. I didn't know if you wanted to say anything. If you don't, I'll move on. It's up to you. Oh, you're muted, by the way.
Sorry about that. No, I was just going to correct you that in Chicago, it was actually the Dutch that did the garbage. It was out in Jersey where I did spend time. It was the mob was out there.
Okay. There you go. There you go. All right. Welcome, Pat. We also have Bill Plavsic here. Bill is recent into the residential, although his partner has been doing residential real estate development for about 20 years. Bill's background was primarily industrial. Then he met his partner and they started doing residential. Bill actually will be for any agents here. They do kind of what I'll call an in-lot type build. They've got a build that they'll be doing brand new construction in Maywood. That is something that may be of interest to somebody here. And then Bill, that partner that he ran into that did the 20 years or does have 20 years of experience, they just recently got engaged. So congratulations, Bill.
Thank you. Thank you. Appreciate that.
Excellent, excellent. Let's see here. And then we also have, last but not least, on the introduction for the panel, we have Shan Lassig. Shan actually is our manager. He's our executive vice president of our construction division, so of our one-time close division. And the one thing that people may not know about Shan, let me ask you a quick question. How many marathons did you run last year?
I ran 67.
67 marathons last year. So there's the one thing you guys don't know. Did that make you eligible for anything special? Anything we should know about?
I think I was eligible now for the crazy at 57 years old, able to do that. A little tagline to that, folks, if you're on and anybody that knows who the Iron Cowboy is, James Lawrence, the Iron Cowboy, is a very dear friend of mine, as well as CrossCountry's sponsored athlete of the century. He competed last year 100 full distance Ironman triathlons in 100 days consecutive. And during our sponsorship, I ran 60 of the 100 marathons with him in that 100-day period. So I ended up breaking 16 world records and he broke 74.
That's pretty wild. So, and we're very blessed to have him, because not only is he really good at beating the heck out of his own body and setting world records, but he's phenomenal in the construction space. And you guys probably know myself, Rich Kimball with CrossCountry Mortgage, been in the mortgage space for about 30 years, and very happy to say here CrossCountry for the last 10. With that, we're going to let Shan talk about the construction product, but I wanted to just kind of open you guys up to the concept of why the construction product is important. And conceptually, right now we're in a very, very tight inventory market. And so this is a product that you could actually potentially steer a buyer. Now and we have to qualify that. We believe those buyers really need to be pre-approved for anywhere from 350 to 400,000 just to consider being in the new construction space. But I also will tell you, and you probably know this as agents, it's a very competitive space. Like, I still have clients making offers on $500,000 homes, and they're not the only person offering. So if we want to try to create a situation where we can put that client in a situation where they're no longer competing, construction may very, very well be the answer. So, and I know the $400,000 price limit seems to be a lot, but here's one kind of awful statistic about why these costs are so much. The president of the Home Builders Association recently spoke at one of our mortgage conferences down in Miami called TMC Connect. At this conference, he shared that the average cost of legislation to build a home, so all the fees and the permits and everything these builders have to go through to pay the county, the state, municipalities, the average cost is $94,000. That's not a piece of lumber. That's not a window. That's not anything that goes into the property. That's just the fees. So regrettably, I know we want affordable housing, but we really need to work on that piece first. So that being said, the one-time close product really does some amazing things. And we also want this to be very interactive. So I'm going to turn it over to Shan. Shan's going to begin to explain the process. And guys, here you go. Shan, the floor is yours.
Rich, I appreciate that. Welcome, everybody. Super excited to talk to you guys about the one-time close options and products. As Rich said, we are dealing with quite an adverse market condition when it comes to government oversight and regulation. So we do have builders that work extremely hard. I sit on the executive board for the HBA, And we are putting together a very good lobby group to really help mitigate a lot of those costs. But as Rich said, they truly do become a circus animal to get all of the information that they have to get just to get a house permitted and approved. But we're very blessed to have the builders that are on the panel, as well as all the builders that we work with. The construction one-time close product is a product that will be extremely beneficial to you guys in the real estate space, especially with the products that we offer in conventional, FHA, and VA. We allow all of those products to be written as a one-time close. I'm going to share my screen and go over some of the bullet points that we have that will open up, I think, and you guys can see some of the benefits that we have. So if you would do me a favor and let me know if you can see my screen.
Yep, you're good.
All right, great. So some of the outstanding benefits that we offer is the construction term is 12-month period, but that is the interim construction period. The loan itself is a 30-year or 15-year fixed rate mortgage, conventional Fannie Mae, Freddie Mac, or FHA or VA. The interim portion that we're talking about of the 12 months is the vertical portion of the loan. That loan itself gets put aside during the vertical portion, and then the loan goes to the permanent phase when the borrower occupies the property. So we have a 12-month term for that builder to actually build the home. The budgets or the cost to build may include your soft costs, closing costs, commissions, and interest reserve. So we have the ability to add all of those soft costs into the cost to build, which then allows the borrower to bring in just the down payment plus their 2 months reserves. That is extremely powerful in the real estate environment for you guys to be able to offer that product where the borrower is, for instance, doing an FHA loan with 3.5% down plus 2 months of reserves, and that borrower is now getting into a home as a new constructed home.
Hey, Shan, I want to stop you there too, because I
Yes.
want to, and for those of you who are unfamiliar with a construction loan, if a borrower who is renting, let's say, decides to take this product and he uses FHA or VA, then he has the opportunity to roll the interest payments that are paid on the money that's being advanced to the builder into the loan. So what this means for your homeowner is they're not actually making a rent payment plus paying interest on the construction loan, which he or she would have to do if they went to a traditional bank, got a construction loan. So the government products for this are amazing in the sense that, you know, we know the build time could be 6 months, could be 9 months. They can stay in their apartment, not have their budget impacted dramatically because the loan will actually make the payments on the government pieces. Go ahead, Shan.
And Rich, that's a good point. Also, Rich, and you can reiterate to this, is when the borrower's renting and we're qualifying that borrower on the new proposed mortgage payment, we don't include the rents as qualification. Is that correct, Rich?
That is correct. Yeah, very much so. So to make it easier for them to qualify, for sure.
Yep, perfect. So thanks for bringing that up. The interest-only products and options. So I'll go into that a little bit in detail. The borrower does have the choice to either roll that in or to make the interest payments monthly. In the world of FHA and VA, 99% of the time that borrower is going to obviously choose to roll that in. So we give that option. The extended lock. I think the important part of this transaction is that the borrower is actually closing, funding, and recording on the transaction as if the home were already built. The loan is locked up front, and it eliminates the risk of requalifying after the home is built. It eliminates the buyer fallout. It eliminates the ability for rates to actually take them out of the qualifying market because that rate is already locked. And that lock is good for either a 6 month, a 9 month, or a 12-month term, depending on what the builder and the borrower need for that vertical portion. That is huge in a market that we're living in today, where interest rate rising environment is changing on an intraday basis. Upgrades and contingencies. These are not only allowed, but we also encourage these. So I'll use an example of a borrower that qualifies for, let's say, $10,000 more than what their actual build costs are. we can add a $10,000 contingency or upgrade line of credit line item for them. So as they're building, they can make those changes and upgrades without having to come out with money out of their pocket. They can actually use that contingency line item to increase or pay for those upgrades. That is a huge advantage for a borrower and a builder to be able to make those changes and upgrades during the vertical construction process. Rich, I want to stop there for just a minute and make sure everybody understands that, because that is a large piece of the puzzle when it comes to building a home and having the ability to add those.
Yeah, no, that's great. And again, we invite you guys to ask any questions. One of the things that when we talked to all the builders that we invited, we do have one builder that's absent. They had an emergency. KLM Builders, which is on the Illinois-Wisconsin border, has agreed to do this too. But these builders that are here, KLM, and we'll put their information in the chat as well, they have agreed to make sure that you guys get paid your commissions on the build, which is unique in the sense that if you think about it, you're getting paid before these guys even put box number 1 through the front door. So that is pretty cool. And like Shan had said, if you can actually put your upgrades and everything in there, it's really a neat product. So thanks, Tony, for adding KLM's information in there.
And Tony, you can interrupt me as I'm going if you do have a chat and people that have to talk. Again, we want to make this interactive and collaborative. So if there are any questions that arise during that time. One thing that I want to mention as well on the contingency is if the borrower and builder add a contingency to the cost to build and the money is not used for any reason during that portion, that money gets reduced as a principal reduction before we modify. So they don't lose that ability if they don't spend it. That's very important. It's like a credit card that if they don't use it, they don't lose it. They actually, that limit gets just drawn down on their principal.
Cool.
Okay. And then the last piece is, actually there's 2 pieces that I want to cover, but the last piece I want to cover just in general is all of the loans available for primary residences and second homes. We do not offer investment transaction financing on the one-time close product. It is available for owner-occupied primary residence as well as second homes. And then I'm going to go into, I think, one of our strongest features at CrossCountry. This loan is 100% serviced in-house. I've built this product from soup to nuts. That builder is taken care of from the time we close to the time we modify in the confines of CrossCountry. We don't have third party. This doesn't get shipped out to somebody. We manage that transaction. We make sure that our borrowers and builders are taken care of during that vertical process, which of course for you guys all as real estate agents, repeat and referral business is the #1 most important thing. And if we can provide a phenomenal customer and builder experience, we're going to get repeat and referral business. That is of utmost and paramount when it comes to a builder, making sure they're getting their money on time during the draw process. And if there's any questions during that vertical process, they actually have somebody they can talk to make sure that they get those answers and questions answered very quickly.
Yeah, it's super important because a lot of companies will use third-party providers, and if you don't control the process, that's a problem. So everything stays in-house where we can concentrate on customer service. So
perfect. Thank you, Rich. And then I'm just going to go over on a high level what the loan programs and what we offer. So on VA offers 100% financing up to the loan limit of $647,200. No money out of pocket. Guys, we can finance 100%. That also includes the interest reserve and the soft costs. That is an amazing product. Not only does the VA allow that, we also have VA that allows us to go up to 95% loan to value, all the way up to $1.5 million. It is a very, very amazing, strong product for the VA, for the veteran. One of my favorite products, myself having 2 active boys in the military, I'm a very strong advocate of the VA opportunity, and that is a really good product. Most importantly for builders, that they love working with us for this reason. We do not use FHA or VA government funds to build. So we don't have to follow those VA and government guidelines when it comes to getting a VA or FHA inspector out during that vertical process, which makes the builders cringe. We have our own inspectors and we take care of all of that in-house. because we use CrossCountry funds to build that home. That loan does not go to the agencies until the borrower's occupied and modified that transaction. That is really important for that builder and customer experience.
I've got a question that came in from Judy, and I think Judy's referring to more production type construction, but I'll throw this out to you, Shan.
Okay.
So she said, how do we compete with other in-house new construction lenders who offer incentives? And we're talking probably like the Lennars or the Pulte's and things like that, where they have
Mhm.
in-house incentives.
Mhm.
You know, that's a production subdivision here in the Chicagoland area. Many of them do not do this one-time close product either. So, but Shan, I'll let you speak to that. And then I'm going to actually ask Pat for his opinion, because him and I have talked about that in the past.
Okay, so that's a great comment. And for all pre-solds in a production environment, we have several production builders who have actually joined and allowed us to be a preferred lender on the one-time close space, because they don't have the ability to offer that. They offer what's called construction only financing or end loan permanent financing with that benefit, or with that incentive that they give. So when you have an individual like that, that's going to a production builder, most of the production builders I've already either talked to, or they are getting very well versed at understanding the one-time close product. Guys, I sat on an HBA conference just last week, and we had 30 of the predominant production builders, and their biggest concern right now is they have about 30% of their portfolio that's actually in the ground and waiting to be built, of borrowers that qualified at 3.25%, 3.5%. And now those borrowers are coming back saying, well, I can't qualify. I've got to figure out where I'm going to get more money down. And we're talking about their end loan purchase. And those investment capital or the builder lines of credit are coming back to the builders and saying, guys, we are now going to have to move that from a pre-sold to a spec or a non-sold property, which means that they're getting hit 15 to 20% in equity that they're going to have to infuse back to the banks. It has been the most intriguing conversation that we've had with production builders because of that exact example, knowing that we don't have buyer fallout because the buyer is already qualified, closed and funded, and you're using buyer funds to build. Production builders are literally on fire with this product because they see the bifurcation of the risk. So
And no, that's a good point, Shan. I think that, what Judy was talking about is the builder that says, hey, I'm going to give you guys $10,000 to use my preferred lender. And, what I always tell people, and Pat and I've talked about this, that Pat would have to increase his price to sell the house by $10,000 to offer that incentive. That money just doesn't magically appear. And, it's like, it's got to be paid for by somewhere. But I mean, Pat, you agree, it doesn't make, in the relationship that we've had, it's got to go back at least a dozen years. We've never done that. So, and I think Pat has some firm feelings about why he wouldn't do that.
Correct, because then you get a buyer that doesn't use your preferred lender, and they're paying a different price essentially for the home than the buyer that does choose to use your preferred lender. So if they have a relationship with someone, they should be able to take advantage of their own personal relationship with that. We always offer CrossCountry because we know it's going to close every time on time. And, that's one of the main reasons we like to. But the other thing about the construction of perm right now is, in the rising interest rate market currently, you get to lock your interest rate in now. And even though your home's not going to be done for 9 months, you've taken that risk out of the equation that's going on in our marketplace currently.
Yeah, and you're talking about interest rates, guys, that have went from the mid 3s to the low 5s like that. So, I mean, it's been a pretty remarkable increase. But to finalize Judy's question, so, Pat's theory is he doesn't want to pocket $10,000 just because one of his buyers has a relationship with a different lender. And that's essentially what that amounts to. So, because they never really, they don't give that to the other lender. They just keep it in their own pocket. So.
That's correct. And if I can just interject, and now I think I understand the question, and I'll be able to answer this, I think, in an understandable way. So, for instance, we have Richmond America. Richmond America offers a $6,000 lender incentive to use their in-house lender that they actually are part ownership of that lender. because they do not offer a one-time close, we have had Richmond American actually honor that $6,000 incentive to be able to do a cross-country one-time close, even though we are not their preferred lender, because they see the value in that. So I think that if that answers your question, we have seen more production builders looking at that option, but what they're finding out as this is a product that works. I've been doing this business, guys, for 32 years. I built the one-time close product with Fannie Mae back in Flagstar in the late 90s, and this product is very difficult for brokers or correspondent lenders to be able to actually even offer, because Fannie Mae, Freddie Mac, Ginnie Mae, and VA require a very, very detailed description of how you can actually manage your construction portfolio without having a third party, and be able to give us the waivers that give us the ability to qualify those buyers upfront, lock, close, and fund, not have to requalify those buyers, because we already have the history, and we already have the true technology and manpower built in the construction division to be able to manage that in-house. That's one of the big reasons that CrossCountry has grown so fast in the one-time close arena, is because of our quality of individuals that are on the team.
Excellent.
Did that answer the question, Rich?
Yeah, I think that covered it. So I think I got it covered, Judy, and I appreciate the question. Thank you very much, guys.
Great
Keep
question.
them coming. And Shan, I'll let you get on. I
Yeah.
think you got another slide after this one.
Yeah, I do. I just want to hit the FHA. So FHA,
Oh, sure.
the 3.5% down. Again, the borrower can finance those soft costs and interest reserve. And then conventional up to 90%. 99% of the banks that we compete with are at 80% loan to value. So we go all the way up to 90. We're one of the only non-bank companies that actually offer Fannie Freddie at 90. So that's a very good product that we offer. Those are the highlights of the loan programs. I'm going to go to another screen in a minute, but Rich, if there's any other questions that we have during this time.
So far, so good. So far, so
Great.
good. We're gonna eventually get into some examples and show you guys some lot prices and talk a little bit more focused into our market. But this is the product in general. So.
Yep. So if you'd like me, Rich, I can open up the McHenry lots and the Oswego lots, so we can.
Yeah, if you, why don't you open up the Oswego lots just for a peek, and then let me.
Can you guys see that?
Yeah, I had to move my chat box for some reason. It moved over to the right. But so this was just, I didn't want to task any of our builders with having to build on a smaller than half-acre lot. So when, the MLS were able to acquire this information, but here's, Pat's got a production build in Oswego. So we just pulled Oswego. It'd be easy for him to go do what they call an off-site, where he takes his crews and gets them out of their subdivision and goes and builds on one of these lots. But here's an example. These are half-acre lots in Oswego, and there's, 10 of them, 11 of them? There's 10 of them in here that all range from $45,000 to $75,000. So that's a pretty affordable lot, number one. And number two, I think, Pat and I talked about somewhere between $350 and $400 for the house that goes on top. So you were literally putting somebody in a new house for $400,000, and here's the perfect example of the lots where that could work. So.
And Rich, I'm gonna jump right in and explain to the real estate agents that are our panel, or that are included today. We offer the ability for the buyer to actually purchase one of these lots along with the vertical construction and close those simultaneous. So they don't have to do a lot purchase and then close and then do a construction loan. The construction loan and land or lot purchase happen simultaneous together, whether that's a builder lot, or as our builders that are on the panel, they also build on your own lots. So if they were to find a third party lot that they wanted to buy and they wanted to have one of our builders build that home, we can add the lot to the cost to build and close both of those simultaneous. That's really important.
Absolutely.
So that's those, and I'm gonna, if you want me to, you want me to open up the McHenry lots now?
You can open up the McHenry lots. I mean, it's essentially the same thing as far as that's concerned. There was probably a little bit lower price point for McHenry. KLM would come down here into McHenry and build in any of these lots, and there's close to 18 of them in here. But you can go, the half. What do we got? Probably under 50,000. There's 10 of them. So, and again, they're all up there. It's an acre to a half acre. So these are, again, all options. If you were to marry one of your clients out looking who doesn't need to immediately move, get them connected with one of these builders or a builder of your own choosing, have them get their plans in order so they know what they were building and what their budget was. Then they can go out shopping for a lot. First things first, though, they should start with me to make sure they, what their budget's going to be. So
no question. Pre-approvals are absolutely paramount. And then I would like to tagline this with Carolyn. Guys, Old Republic Title is a phenomenal title company. We work with them all across the country. And making sure that we actually have title representation who can perform a CD properly, who can make sure that they offer all of the endorsements that are required and have that customer and builder experience be there. Carolyn, I'll turn that over to you for just a minute, and you could talk about what that looks like and how we actually put those two together so there isn't confusion as that borrower goes to closing.
Well, we actually have our construction team who handles everything from, like you said, soup to nuts. I mean, they walk through the process. We can, depending on the size of the deal, which we will work with the builders, the lender on pricing and whatnot. So they keep it very succinct and on top of what they're doing. So they're good at what they do.
That's a big benefit. And so, Carolyn, thank you for being on the call to explain that.
So we did have Shan, we did have a question. Okay, so great. A buyer can tie in the lot price and the price to build in the new home and the construction loan, which I think you just answered basically. Yep. Yeah, they can tie all of that into one loan. So absolutely.
So let's do an example with that, Rich. So let's do two examples. We're going to do an example of a buyer who actually owns a lot. So let's say the buyer owns the lot and they come to Pat, and Pat's going to build their home for them, and they want to use their equity of their property, and you've tied them in with Pat. We have that ability to be able to actually close the construction, use the land value or land equity as their down payment or their equity investment into the transaction. And at that closing, even if it's a refinance, guys, at that closing, at the first draw, which we allow all of our builders to take a first draw closing of up to 10%, that would include your commission, even in a property that borrowers already own. So you bringing a buyer to Pat or one of our builders also has a big advantage for you, not just looking for a lot, but if they already have a lot and they're looking for a builder, that opens up a completely new demographic of opportunity. The next would be a purchase transaction. So we have a buyer that wants to buy a lot, and we have our builder that wants to build a home, and they have lots to sell, and they also have lots that they're looking for outside of what the buyers or the builders lots are. So we take a lot contract, and let's say that lot contract is $100,000, and we take a cost to build contract, and that cost to build contract is $300,000. We marry those two together, and now we have a $400,000 total cost to build. We will close those loans or those properties, those contracts simultaneous at closing. The property gets paid for at the closing table at title, and the first draw goes directly to the builder, and the line of credit or funds left for future draws shows up on the CD, so the buyer understands exactly how that transacts. That's kind of the explanation of the two transactions, which opens up again a vast array of buyers that are out there in the marketplace.
Yeah, and I know Craig Jackson had a question in here about the Southwest area has got properties between 200 and 350. Can this work for me? Not with the builder that I have here, because I think that between they're probably going to be 4 to 440, 4 to 450 as far as the Pat being in the southwest suburbs. So whether or not you could find a builder to build cheaper. We've already talked about the fact that legislation alone is averaging about $100,000. So regrettably, as much as these guys would love to build something affordable and still be profitable, because the builders are, everybody's in it to make a dollar, it's just really tough, I think, to hit those very low price points, at least for the moment. So. And then I was going to say, Shan, did you want to, we had that worksheet that we looked at the other day. Do you want to show everybody how something like that would work?
Yeah, so put together, you want to do a loan where we'd actually add in the cost to build, add into the cost to build.
Yeah, we'll show an FHA. I mean, I believe that probably can be done. It's a little tight, but it could probably get done.
Yeah, so here's our construction to perm price calculator. So this will be able to identify what it's going to look like when we add the cost to build for the soft cost and interest reserve, and we'll build an example for this. So Rich, let's build the example of the cost to build. Where would you like me to build the cost to build as this example, Rich?
Why don't you put the cost to build on here? I know when we were talking up north, we had KLM had given me a number probably at around 350 to be able to build something up on the Illinois-Wisconsin border.
Okay, there's 350. And what would you like to do for the lot purchase? What value would you like?
Up in McHenry, we said we had at least a dozen of them that were 50 or less. So
Yep.
You want to put in, yeah, that's fine. Perfect.
Okay. All right, so in this example, and we'll do a 12, let's actually do a 9-month example. So we'll change it up a little bit. So for everybody on the screen, we have an estimated cost to build of the $350,000. We have the land purchase of $50,000. Now, this is the line of credit or the contingency that we talked about that we're able to add in to that cost to build. So we effectively have $7,000 in funds that are not pre-allocated for a line item. These are funds that the builder and buyer will be able to spend during that vertical construction on upgrades, allowances, changes, anything that they do during that vertical process. So if I build this product and then I go down here to the estimated construction soft costs and interest reserve, the $19,904 is the amount of money that we would add to the cost to build. So then the buyer would not come in with any closing costs or interest payments during the vertical construction of 9 months. This would then take this total cost to build to $426,904. The borrower would then have their down payment based on that new purchase price of whether it's VA, which is 100%, FHA, which is 3.5%, or conventional, which is 10%. That's the way that we would actually build that in. And now that borrower is able to finance all of that into the transaction and effectively go the entire term of the construction without any mortgage payments. And then when the loan modifies, the borrower then occupies the property and starts making the mortgage payment. This is that classic example of being able to finance all of those costs into that cost to build.
Yep. Yeah, that's perfect.
Well, yeah, hopefully that makes sense. And so you guys can actually see that.
That's perfect. Anybody have any questions about how that ends up building out? I mean, the one incredible thing is you're talking about with the veteran being able to buy the brand new home with nobody down or 3.5% down on the FHA. It's pretty incredible stuff. So
Yep. And then Rich, if I would just interject here a little bit and remind, in this $350,000 cost to build, real estate agents, your commission is in this number. So when we close and fund, the commission gets paid out along with the lot and along with the 10% soft cost draw to the builder. Yeah. That's really important, you guys. We're closing the home as if the house were already built. So this is acting just like an FHA, VA, or conventional purchase transaction.
Boney asks if we'll be sharing the slides. Boney, if you want to send me a email, we do have a recorded version of this that they'll give us in about 24 hours. We can get you that and you'll have a copy of the slides.
Absolutely. And then I would strongly suggest you guys, as Rich has noted before, having that buyer come in and make sure that Rich and his team have their clients pre-approved really kind of sets the stage for this process to go very smoothly.
Yeah, definitely. As you guys know, it always starts with the money. So So always starts with the money. You got to make sure that they can afford what you guys are showing them. So let's see here. Can you please send? Oh, okay, good. So Amy will get you that out. Tony, I'm sure, is taking notes on all this. So relative to the slides that'll be available. So that's good. Perfect. This ultimately, I mean, incredibly, the program is actually, we make the program pretty simple.
We do.
In this, some traditional ways that they've done it here in Illinois. Illinois is unique in the sense that, well, we're unique for a lot of reasons, guys. We know that, right? But if you go to a state like North Carolina, this is all they do. They don't do what we do here in Chicago, which is just a traditional end loan or a separate construction loan. Typically, a builder like Lennar or Pulte or some of the big boys here, they'll take 10% to start to dig the hole, 10% more once the property's under roof, and then the client's got an end loan somewhere down the road that either is or isn't locked, and who knows what happens to that interest rate in 6 or 9 or 12 months. And I will tell you, the time to build some of these can be a little bit longer depending on the builder. We've seen some builders go to a 2-year contract versus a 1-year contract because of labor, material shortages, and things of that nature. So our guys all, thank God, build in much less time than that, which is good. But they're always cautious just because of what's they don't know what's going on around the corner. So that being said, the one-time close is really a better solution for everybody, just because we'll lock in the rates, less money down. You don't need 20%. There are really no builders that build with less than 20% down. They do need that longer or bigger commitment, which is something that actually scares a lot of people out of trying to look at new construction. But these products are the answer. So let's see. Judy says, interested from the beginning of the property is completed. So by doing this type of loan, it seems the buyer is paying interest on the loan from the beginning instead of when the property is completed. That is correct, Judy, but the alternative is you come up with 20% down.
Well, I
ahead.
think, Rich, I think it's really important to, because I get this comment, and I'm really glad you brought this up. So in a build environment where the buyer is not carrying the construction loan, and the builder itself is doing a construction loan for them, and they're doing end loan purchase, unless the builder has cash to build the home, there are finance costs that are built into his cost to build. I think the important part of that is that when we're talking about the 3 builders that we currently have on this panel, that money has not already been added to their cost to build because they don't have those carrying costs. Somebody is paying interest during the vertical construction, whether it's the builder themselves or it's the buyer. There is not a double dip there. So that's a good question to bring up, that yes, is the buyer paying the interest payments? They are paying the interest payments, but by building that into where the buyer is carrying that and the builder is no longer having to carry that, the builder doesn't have his carrying costs that he has to add to his cost to build. Guys, that's
Absolutely.
a huge, that's very important to understand, that all of the production builders already have that cost to build. That line item is already built in as their hedge or their costs that it costs them to have the money to actually build the home.
And that's under the assumption that they're accepting a traditional end loan. In other words, they're really gambling, and it's one of the reasons why we think eventually more and more even Chicago area builders will gravitate to this position, just because, again, it mitigates their risk that somebody can't afford this in a rising interest rate market. Because once that loan closes, we're good to go. We know they're going to be able to afford. It's done. It's closed. They know they're going to get their money. It's coming from us. So
Yep. And it bifurcates that risk, Rich. I think the builder feels very comfortable knowing that that buyer is going to be occupying that home as soon as they build it.
Yep. Yeah, very much so. So let's see here. Any other questions? Certainly appreciated. We appreciate all the feedback from everybody and all the questions. Shan, you're amazing as always. Do you have anything else to add to this?
I think at the end of the day, it's a different mindset in a different interest rate rising environment. in my 32-year career, I started this business in this practice in 1990. I've gone through 5 of these very cyclical cycles. This is the second fastest cycle of interest rate spread in a 90-day period since we've seen since 1987. It's that fast. So we are in a paradigm shift. We are all having to think about what does this look like going forward because things have happened so rapidly. Our goal is to be able to offer you more opportunity to get those buyers to be able to look at more properties so they can find something that they actually want to own and occupy.
Absolutely. And and Pat and Bill, if you guys have got anything to add relative to that, please do. And if you don't, that's fine too. I'm just checking my calendar for upcoming. But Pat, you have anything to add to that?
No, I don't. I think you covered it very well.
Perfect. Perfect. And then Bill, anything?
No, this is great information. So I look forward to any questions that come up and see how they apply to all of us.
Yeah, that's great. Carolyn, anything to add from the title side?
Well, I would hope that we certainly can accommodate and help some of the future people buying and building homes. So we're there
Yeah.
for you.
That's awesome. So Nia asked what respective areas that you guys build in. Again, Bill concentrates in the village of Maywood. Our guys at KLM work the Illinois-Wisconsin border. They're great builders and they do have a remodeling group. I couldn't get them to come to Schaumburg. So you got to be on the Illinois-Wisconsin border for KLM. And then Pat works in Northwest Indiana. He's got the subdivision in Oswego. And Pat, I would let you opine as to what other areas, if you're still with us, what other areas outside of Oswego and Northwest Indiana that you would cover?
We come into our office is based in Hinsdale here, so we're based in Hinsdale. So we go out through the western suburbs.
Oh,
You're
cool.
in Downers Grove, that area out towards Oswego, Plainfield.
Perfect. Well, that's good because I think Nia's close to you then, so that's good. Her offices are close to you. If there's no other questions, one other thing I'll share with you guys, we've got some upcoming educational programs. Saturday, we have on the 16th, we are doing a personal budget class from 9 to 10. I've been teaching this personal budget class, give or take any month for any customer, any realtor, anybody who just wants to know a little bit about a form that my wife and I have used for the last 5 years that's truly a game changer. And it's part of a class that we teach to all of our closed new homeowners so that they can get a better idea how to be more financially fit. And then we do have a home buyers class coming up on April 23rd. And that is just for anybody thinking about home buyer. That'll be Saturday. We alternate the home buyers classes every month. We'll do one on a weekend, and then next month's will be during the weekdays. So that'll be on the 23rd from 9 to 10. And last but not least, what do we got coming up in May? I can't see the calendar, Tony. What's our lunch and learn subject for May?
It is the CCM signature products.
Oh, perfect. Okay, good. So next month we've got a really exciting program. The CCM Signature Products, that's our acronym, CrossCountry Mortgage. Our signature products cover all those lovely programs that are outside of Fannie and Freddie. So you want to talk about bank statement loans, you want to talk about asset depletion loans, debt service coverage ratio. If you guys have borrowers that fall outside of Fannie, Freddie, and FHA, come see us next month at our Lunch and Learn, which is going to be May. What do we got on that one? Is that the 24th that I saw? Tony?
Yep, the 24th.
Perfect. May 24th. So perfect. All the links for the classes are in there. Lillian, thanks for the comment. Oh, awesome. Thank you very much.
Hey, Rich.
Lillian, yes.
Hey, Rich, real quick. It looks like Bill's got his hand raised. So I wanted to have
Oh, yeah.
jump on
Go
that real
ahead, Bill.
quick.
Sorry about that. It's funny because you had mentioned that our builds are in Maywood, and I'm sure there's a lot of realtor partners and friends out there scratching their heads like, why Maywood? And not that I'm tied to Maywood in any particular way or live there myself, but I just wanted to share that the reason we're there is, we do a big portion of our business is rehab work as well. So we're pretty much rehabbing and selling one home per month, anywhere from, Mount Prospect, Schaumburg, Hoffman Estates, Roselle, Palatine, you name it. But we got into the Maywood area for those realtors that are in the, that part of Cook County or western suburbs. They have, when we first started rehabbing there, we were told they had 300 abandoned homes in that neighborhood, which is kind of amazing. And probably like me, most people scratch their head, like, is it safe? Do we really want to be doing work there? And I would just want to share that the reason we're doing more work in Maywood is, Amazon took over the racetrack not too long ago. And with that came hundreds of jobs. And those folks, are trying to figure out whether they live in Melrose Park, Des Plaines, Oak Park River Forest. And what we've seen is they've been very active in Maywood. So there's a lot of homes being bought and sold in that particular area. So I only mention that because it's somewhere where we're going to continue doing a lot of work in. There's a lot of opportunity, but from the realtor's perspective as well, I think there's a ton of opportunity there because there's so much land, there's so much redevelopment that's going on there. And our goal is to buy up as much property in that town and either renovate or build new construction there. And so we're excited to do so. Obviously, if anybody has questions about that neighborhood, they could feel free to contact me after this call as well. So sounded a little, I don't want it to sound scary like that area, but it definitely has a lot of upside.
So with that real quick, Rich, and I'll just jump in and let everybody know, guys, if you are looking for the opportunity for somebody that purchases a property that wants to scrape and rebuild that is a ground up construction product. We offer that product as well. So that product fits under the same guidelines. Very important, Rich, for them to know that we actually do offer a full scrape rebuild opportunity.
Perfect.
Great.
So tear down and build up a new house is available for the product. So that's amazing. And Bill, Bill and I talked about this when we were first introduced. I was doing some rehabbing from 2003 till about when the housing bubble popped in 2008. And we started in Maywood, and I think it's an incredible community. So we spent a lot of time there and renovated a lot of those. There's some beautiful old homes there. I mean, it's just a lot of fun putting those things back into shape and getting them back to that they're actually usable. So it's a great area, great community. Also, Lillian had made a comment that she was looking for a builder in Moniz. I'm not sure, Pat, that's in your wheelhouse, but I can connect the two of you if you would like. Other than that, and it's good to know that the product can be used for teardowns too. So guys, if these builders, while they're awesome and incredible, and they have agreed to compensate you if you would bring them a buyer, if these guys don't work, and they're out not building in the communities that you want to be in, this gives you the perfect opportunity to make some phone calls to some builders, introduce yourself, see what it is that they're doing, see if they need any help marketing their product or their properties. And then if they are building something that's in a price point where you have clients, make some really good connections. So it's another good tip from us. So with that, if we don't have any other questions, I want to again thank you very much, Shan, for your help. I want to thank you, Carolyn, again for your sponsorship, friendship, and loyalty. I do appreciate that. Pat, same thing. Really, really love our relationship with Pat. It's been just great to work with him and his crew down there. Tony, great job also putting everything together. So couldn't do it without you. And Bill, while we just met, looking forward to helping you continue to build out Maywood and any other communities that you end up in. So guys, thank you very, very much for attending. And again, keep an eye out on your email for introductions to our next programs. Thank you, everybody, for attending. Take care.
Thank you, everybody. Rich, thank you very much.
Thank you.
Thanks, Shan.